SoftBank's big bets have soured, and now the costs are coming home to roost. A disastrous 3 months for the marquee investments in its tech fund. It's resulted as the company's first quarterly loss in some 14 years. A $6.5 billion loss for SoftBank itself, and a $9 billion loss for the so-called Vision Fund upon which it is part. SoftBank's CEO Masayoshi Son has been well and truly humbled. Now, this is not unfamiliar territory for the man known as the unicorn hunter. Let's look at exactly what he's done and see how it actually goes. So, these are the major investments. When SoftBank, and particularly Masayoshi Son, went big in the dot-com boom. Now, the bubble burst and he lost most of his fortune. That is an out-and-out failure. In 2000, he invested $20 billion in Alibaba. It's now worth over $100 billion. 20 million to 100 billion. I think we can call that as being a roaring success. In 2017, Uber, well, he became the largest shareholder. The stock is at an all-time low, but it's too soon to say that's an out-and-out failure. Let's put that there, half and half. You never know what he got in at, what he paid, the level of investment. And the same with Slack, looking successful, now at an all-time low, but we don't know what they went in at or what the returns are, things. So we have to gauge that as being if beyond. Now, WeWork bungled its IPO. The value of 47 billion dropped to 8 billion. Masayoshi Son admits poor judgment. The poor judgment means, I think, since WeWork could still, they're going to have to put more money in. They have put more money in. Let's call that a failure at the moment. That's the way it looks. Really only one substantial success and numerous possibles, failures and maybes. Clare Sebastian is with me. Clare, not a terribly successful strategy.
You mean his investing in these unicorns? Well,
yes.
I mean, it has served him well in the past. Arguably, Alibaba is one of the best venture capital investments of all time. It's really held up there as that. But I think the problem now is that he's colliding with the public markets. Uber was a big test because that was the first company in the Vision Fund to go public, and it's not gone well. Wall Street's appetite for these loss-making companies is waning. Uber has yet to convince the market that it has a path to profitability. And today, of course, we have the lockup expiring in the shares, and we see them tumbling on that as well, though perhaps not as much as expected. But WeWork is really the big cautionary tale, Richard, and that's where we see the humility from Masa today.
And they're putting more money, and he's putting more money in.
Right, and he tried to justify that today. Obviously, they had already piled more than 10 billion in. They piled another 10 billion in to rescue them. He said this isn't a rescue. This is a way of buying more shares at a lower price. But I think there's clearly some scepticism around that because this is going to lead to fundamental restructuring.
Besides these marquee names, what else does it do, SoftBank? I mean, if these are not doing well, is the rest of the group doing OK?
Well, I mean, it's still a telecoms company in Japan. They own Sprint, ARM Holdings in the UK. I mean, the rest of the company seems to be, doesn't have such marquee losses as the Vision Fund. But the Vision Fund is super important, Richard. Earlier in the year, when the company was making a profit, it was more than half of that. So this is a big deal for Masa. It's not just his bottom line, it's his reputation as well. And I think that's why he came out with such candour, such humility, but also defiance today. He said, we continue to forge ahead with the second Vision Fund. He's going to invest in artificial intelligence. He still wants to be, the man with the vision, finding the next big thing.
He likes the limelight.
Right.
I think back to his arrival at Trump Tower during the transition. What he was promising he was going to do over then.
The mystique. The mystique.
The mystique, yes. How is he viewed? Is he viewed as an oracle who sometimes gets it a little bit wrong, or is he viewed with something regarding Playboy who can't get it right?
I feel like there's a shift taking place. It's partly due to the kind of the zeitgeist that we see on Wall Street, that the people are taking a second look at these loss-making companies. They may not be able to stomach it quite so much anymore. And I think, it's just not been going very well recently, and because of that, people are looking at him and thinking, he's clearly infallible. He's clearly fallible.
Uber's the interesting one, because Uber, the share price goes further down. There are more issues and problems, but at the same time, there are hundreds of thousands, if not millions of people taking Uber rides every single day. This is not a pets.com.
No.
This is a real company which has shifted the transport behaviour of large numbers of people worldwide.
And Uber could still come back. Like, we had the CEO.
Well, but surely it will do.
Well, we had the CEO this week just saying, you know, they're going to be profitable on an adjusted basis by the full year of 2021, faster, in fact, than Lyft is promising. But I think the question with Uber and with the likes of WeWork and others is, did Masa Son come in and give them too much money, fund too much growth too quickly, and get them to the point where they're now struggling to make the numbers add up?